Friday, September 1st. Market analysis, Stan Ehrlich. And I begin with the indexes usually, and then go to futures and sometimes sectors and forex. So I've been talking about for the last approximate week the probability of the stock market indexes having some sort of rally high. I thought it was going to be a shoulder on a head and shoulder top formation, which you can see detailed on this chart. Again, the middle of June this year, of course, was the first shoulder. The head for most of the indexes comes to July 27th or in the vicinity of. And for the S&P 500 Spider SPY, we have a bearish engulfing ER sell signal perfectly on top in an area of resistance. Great combination. So that is the dominant formation at this point. Today, which is Friday, and I've been saying for a week that approximately this Monday, and I forgot about the Labor Day weekend holiday stuff being a little conflict. So you push it back a date or pull it up a date. And if you pull it up a date, it's today. If you push it back a date, it's Tuesday. And some markets are trading on Monday. I was expecting to find some sort of bearish engulfing or bearish signal or bearish activity starting to show me that the last rally high was in place and starting to come down. Well, guess what? We have an outside down day, bearish engulfing. At the moment, we're up 30 cents, barely higher. So it's not a bearish engulfing. It's actually a bullish engulfing at the moment. But even a bullish engulfing under these circumstances where the market is almost overbought, or especially if it's overbought, and in an area of resistance, and in this particular case, almost closing a gap. It started to close that gap I've been talking about for a week or more, probably longer than that, because we created the gap at the beginning of last month. This is September 1st. And that gap would be closed at 455.49. But today's high, which is above yesterday, did not make it. It stopped at the bottom, which is a little bit of resistance. So it qualifies for an outside trading range or engulfing. But momentarily, we're up a little bit, and I'm stressing a little bit. I think this market's going to close lower, I hope. I expect prediction. And therefore, a bearish engulfing. I won't turn red because we're not overbought. That's disappointing. But I keep telling you the last few days, the last shoulder on a head and shoulder top is not necessarily a colored, in my case, ER sell signal or head and shoulder bottom buy signal, because it doesn't get overbought or oversold very often on the last shoulder. On the first shoulder, absolutely. We usually end up a very strong or very weak time period on the first shoulder. Then there's a little correction and an extension, in this case to new high ground, which can also get overbought, which this did. And I'm lucky I got my bearish engulfing on the top of the market for the Spider SPY. I'm thinking this is it. Today's the last shoulder high. You might want to call it a double top formation. It doesn't matter. The same downside objective applies. And that downside objective is, if I'm right, 407. We're currently trading at 450.80. Last trade. It's a fairly big move. In fact, it is approximately a 50% correction of the October 13th low, the bottom of the bear market with a bullish ER buy signal last fall, the October lows. which are coming up next month again. And I'm getting sell signals that I think are going to last approximately 6 weeks, right into October. This is amounting to a great setup if it works correctly. And that is a big if, capital I, capital F. We're a long ways to go to see if this works the way I'm hoping it does, because it's actually pretty idealistic situation. Okay, I'm assuming and claiming at the moment that we're probably going to close lower, and it's going to be an outside down day, bearish engulfing, and we are not going to finish closing the gap like the QQQs, I'll show you in a minute, did the job. They closed the gap and a bearish engulfing. Even more better, if that's the proper phrase, more excellent than the spider. So here it comes, I think, the move down to the neckline, the fast and furious break of the neckline, breaking into new low ground for weeks and weeks and weeks, months, and the beginning of the second half of the decline, and the head and shoulder will be made, and now you hope it works completely, satisfactorily, and gets down to that 407 I just quoted, and maybe a little bit more. It is a minimum downside objective. We do have an old gap to close. I should pull that over to the right quite a bit here, from just before the head and shoulder started to form, and that gap is around 423. So that would be a great start, actually almost halfway down to the objective, not to be ignored. This is great. All right, DIA, how similar is it? We have yesterday a bearish engulfing ER sell signal. I think that is the last shoulder on the head and shoulder top. I think the DIA, and where is my minimum downside objective? I thought I had drawn one. I guess I did not do that. Well, that's a mistake. I can tell you that, we have plenty of time, that it's going to be down in the ballpark of approximately 330, maybe a little lower. Okay. So today, all we did was rally back up into the range, which is normal, of the bearish engulfing yesterday. I give it usually 3 days for my ER3 signals and trades, but this is normal. The only thing wrong with this is it didn't get overbought. Then I'd have a red bearish engulfing. It didn't quite get to resistance, but that's okay. The timing for both of these, all of these signals, is about right. I've been talking about next Monday, maybe even Tuesday. I forgot Monday was a holiday, so Tuesday or today. So DIA did it yesterday. So what? It's still in the ballpark timing-wise. These things are not very exact most of the time. They're in a similar, very similar to what normally happens, the examples you see in textbooks. Okay, I'm liking it a lot. What about the QQQs? And I would like to get it to where we can see it. Well, ladies and gentlemen, we have that gap closed. I've been talking about it for weeks. On the opening, with a tiny little extra rally to do the job completely. And then what? We have a bearish engulfing outside down day. Oh my God, I would have loved this if it was overbought, and we missed overbought by a very small amount. I'd like 75 for the RSI high. Instead, we got 72.89. Call it 73. You can't get too much closer. So I put little red dots inside of today's range to indicate a bearish engulfing, but not an ER sell signal, but bearish engulfing. They usually cause the market to go down no matter where they appear. My minimum downside objective is down to 322 for the QQQs. There's the neckline. I should relocate this arch mark indicating the shoulder to right there. This is the inside shoulder, a bearish engulfing a few days ago, and I started talking about that at the time it happened because we have an inside shoulder. This head and shoulder top, if it works correctly, ladies and gentlemen, is going to go down as a double shoulder, head and shoulder top. Now, I've used the middle of the two highs as my measuring point instead of the highest high, simply because the timing works out better. And the second high is almost as high as the first one. So I'm kind of averaging, but I love what I'm looking at. I really wanted to see an outside down day that's going to work around this point in time. Couldn't ask for too much more. Okay, that's the three major important ones. The Russell doesn't match. The Russell had a bullish engulfing, in fact, 3 days ago, and it worked great. The bullish engulfing helped cause the rally up. Now, today's price range is nowhere near a bearish engulfing. We need to go down a lot. In fact, we're still up 230, and the low today is just a little bit below yesterday's high. So, unless there's some big collapse here before the bell, and we are in front of a 3-day weekend, basically. So I'm not going to be surprised if there isn't a lot of activity in the last couple of hours, and we're getting close to that. 2.5 hours left right now. 10:30. I know I'm very late, but I wanted to see how this reversal was panning out, so I procrastinated a little bit for today. I think today is still going to be the last shoulder high in the 2000. The timing is about right. The price level is a little bit higher than I would have liked. You can never make the market do what you want it to do. You can only move with it and predict it as a result. And that's it. That's my prediction. We are at the last shoulder high. We can't go any higher, or I'm starting to be wrong to some degree or another, and I'll say so. But if I'm right and it starts to make lower lows day by day, I'm going to point out the pattern, the details, the process, and we'll see how this works out. Remember, these markets bottomed out with head and shoulder bottoms last year. They were big ones. They lasted, I think it was 6, 8, 9 months or something. But for a few months before October 13th and after, you developed a head and shoulder bottom. And in particular, I think it was the QQQs that worked the best, in fact, which had a double bottom. I'm apologizing. The Qs had a double bottom. It must have been the DIA. Anyway, and this is the Russell. I'm sorry. The Russell I'm looking at. The Qs, maybe I was right. The Qs did, I think, have a great, yep, it did. Head and shoulder bottom. There's the head. Timing was a little early. There's your shoulder, January early. And there's your first shoulder, June 16. So June 16, October 13th, and approximately the beginning of January of 23 completes the formation. The neckline is, for all practical purposes, the major long-term bear trend line from the beginning of the year for the bear market. And when that got broken, up you went. So this is simply the opposite and a little bit smaller. And today could be the turning day down, could be, I want it to be. We're about to find out, probably in a week, maybe less. I love it. We have an outside, tiny bit higher at the moment, trading range on the E-mini also, and on the NASDAQ futures, which is an outside down day right now. So I'm getting complementary signals all over the place, especially if we can maintain a lower close. Spider right now up 10 ticks. That is seconds worth of time before it goes red, and it might just in the next few seconds. But, you know, I'm not talking about right now. I'm talking about the closing price. I want the close to be lower. That's the important thing. Okay, futures. Excuse me. We're looking at the E-mini, and I think I've got things out of order today. I apologize. Hopefully they're going to fall into place, but I don't think so. So I'm going to be a little bit of a random here. The E-mini maybe making its last shoulder high. I think so. There's the neckline. There's the formation. I'm supposed to go down to a minimum of 4,069. It's going to be, I hope, into October, a month and a half, call it 6 weeks on the average from now. That's it. Next chart, NASDAQ. That's good. Outside down day at the moment. Same formation, same prediction, different prices, same timing. Next, gold has at the moment an outside bearish engulfing, but it's not quite overbought. Otherwise, I would have gotten a sell signal at the high of the rally, maybe. I did get a buy signal at the bottom, the exact low day, and we bought it the next day. And it's been a great trade. We're about to be, or maybe we got hit on the stop, I'm not sure. And that would be right about where the low is approximately. I don't know. It looks like we hit the stop. We'll know later on. And I'm not showing the complete strategy on all of these charts. So in this case, ER3 overnight version. I have ER3 scalp day trade or overnight. I have ER1 scalp or overnight. That's two different strategies based on the same signal with different exit methods. So it's a total of 4 if you want. 1, scalp and overnight. 3, scalp and overnight. Next chart. Soybeans, it's out of sequence. Pretty much an inside trading range, near unchanged. I'm reserving commentary because we're between a rock and a hard spot. We could have had a test of support and the beginning of a next huge leg up, in my opinion, but I need new highs above this last. And of course, we got a bearish signal on top, basically. I need to close above 1437 in order to get super bullish. On the other hand, we could dribble back down toward 1290-ish. And if that does not hold, I'll have to get pretty damn bearish all the way down to 1073. If, again, 1280 doesn't hold. So I'm between recommendations, so to speak, until I get a signal. Next chart. Natural high-grade copper. Now, I'm going to get around to all 4 metal markets, but copper, we bought the bottom, like platinum, like silver, and gold, all 4 metals. This has a new high on a sharp spike, but I don't like the fact that it's settled back below the previous highs. I need to have a little more strength on the close. I want it to close as strong and as close to the high as it can, but if it can't, it's not necessarily a good thing. Next chart. Platinum. Yay! Guess what? Oh, boy, oh, boy. Well, we've got a bearish engulfing at the top of the rally in the platinum. We had a bullish engulfing at the bottom of the move. Boy, it's like Halloween. You go to a front door and you get Christmas candy every time. Well, Halloween candy. So I'm turning bearish on platinum. All you have to do is stay lower than yesterday's close, and I get a sell signal. Can't help it. It's been a hell of a good ride. We bought it very close to or exactly at 898.5, and we have dumped it at approximately 869.20, near the low so far. At this point, obviously, I hope it's going to have lower lows and start coming down. How much? Well, maybe all the way back down to where it was. Next chart. Bullish engulfing a couple of days ago helped it work up a little bit, but this is not good. This is bond futures. It does not have a bearish engulfing today, but bond futures, and at this particular point, I have to bring up the topic. A lot of you guys are going to see this. What happens if I draw in this line here? What would you call this line? I'd call it a neckline. First shoulder, bullish engulfing, fantastic. Head of the formation, oversold conditions, no engulfing, too bad. Big rally. Neckline, well, a little bit too downward slanted, but not too badly. and that's typical for head and shoulder bottoms. And the shoulder low, if we get one, I'm calling this premature now, is at about the right prices. And the timing for this looks to be pretty symmetrical for the amount of time from the first shoulder to the head, from right there to the head, and you can count the days. We're about correct, just eyeballing this. Maybe a day or two more, but we might be forming a head and shoulder bottom. Maybe. I really don't want that because I want a big move down for 6 weeks in the stock market indexes. If you start seeing the bond market go screaming higher, especially if we start getting in the 123, 124, 125, 6, 7 area, then the stock market's going to love lower interest rates, and it's going to not necessarily work its way all the way down into October. So we have to figure out what's going to happen here. Next chart should be notes, but I got cotton screaming higher. New high close through a resistance area that used to stop this market ever since approximately October of 22. This resistance area has been a whopper, but finally it's broken a year after it started. Now it's turning into support. I fully expect to see higher levels. I think this is starting a bull move. Cotton. Don't have a good feel for how far up it's going to go at the moment. My first thought is that it should at least, and this is pretty minor, go up to 95. I'm fully expecting that. Yeah, it might come back to support first, but it might go up to 95 first and then come back to 90 or 88, then go up some more. But I have to turn bullish on cotton. It's a major upside breakout. Minor problem at the moment is it is overbought, so it has to stay up here. And I'd love to see maybe 1 or 2 days more follow through to the upside and then have a correction. Next chart, OJ. Bearish engulfing, rally back up into approximately the middle of the range of yesterday's bearish engulfing ER sell signal, which has created a minor double top so far. You have to close below the lows between the two highs in order to get a breakout of the double top. Then you're going to easily get a move at a minimum, supposedly down to 287, and then down even more after that. This could be the beginning of a long-term bear move. I can't tell that yet. It's too premature. If I had a very long-term cycle, for example, of a year or two, and this was the time period for the year or two cycle top, I'd be screaming bloody murder that we could have a long-term top. But I don't know that. Should deserve a little investigation. Next chart, OJ. Now we're in 10-year notes. We do have a bearish engulfing. It is an outside down day, but not being overbought, we don't get a red signal. We came reasonably close, around 70 on the RSI scale, but no, no cigar, no red. Actually, I haven't seen a red in quite a while here. Looking for some red here real quick, and that'll be the top of a rally. Wow, it's been a long time. Look at that red. That was a whopper. These are how profound they can be sometimes. And that was almost exactly a year ago and a month. But, you have to wait for some of these signals. Okay. I'm looking for a test of the lows on both the, at the moment, the 10-year and the bonds. Well, I changed my mind. No, that's not true. There might be that head and shoulder bottom forming. That's what I'm looking at. So the next week should tell the story. Next chart is crude oil. New high, likely new high close for a long time, since November of last year. This, I'm sorry to say, is rather inflationary. Crude oil, of course, is energy, and it looks like a major bullish breakout. I know it's overbought the second day, but sometimes you can get overbought for several days, even more, not usually. So I expect a correction, but this time we're going to hold at the red zone, and it's not the bottom one. It's this little one right here, just below today's lows, and start to make higher highs after that in the next week or two. I have to turn bullish on crude oil. Next chart. Heating oil, not the same situation. No comment. Looks like it could turn down a little bit more. Not very sure. No comment. Natural gas, same kind of thing. No comment at the moment. Next, outside down day in silver. Here we go. We have two bearish reversals, platinum and silver. Gold didn't quite do it. The bull market from the bottom, we caught almost the exact low day in silver. We caught the top of the rally. We caught this bottom of the break. We caught both highs on the double top. I mean, both of them. We caught the bottom of a huge move down in the beginning of the big move up. This year has been great for precious metals, especially silver. So turning bearish, looking for a move down to 22.7. Next chart. Sold the top, bean oil. A little rally today, going sideways and a little bit of a pennant for a couple of weeks. Let's wait to see what happens when it starts to make new lows or new highs, and that'll be very soon. Next, I'm bearish on bean oil. Resistance stopped the rally in overbought conditions, and we have another new low ever since that happened. This is the third or fourth day now going down in soybean meal. So I got to be looking for new lows, a test of 380, and then a test for the low 360s. Next, we already have seen new lows for a very long period of time in cotton, ever since the low that happened back in July a year ago. And we are extremely close to that low a year ago. I think it's going to get broken. We might bounce off of it a little bit, but if we close below 471, it'll drop a lot more. This trend line is goofed on TradeStation, shouldn't have come down quite that much. It keeps realigning my trend lines sometimes. I have to complain about that. Next chart. And again, wheat has made another lower low yesterday. And today we have a new low close, probably. And this is long-term bearish. But hey, we are already very low. So what kind of downside potentials do we really have here? I don't have an answer to that question. So I'm thinking the bear move we're going to see, I think, is going to be fairly slow. Well, we'll see. But I'm bearish. Next, cattle. This does seem to be a test of the neckline, like I was questioning a week ago. We have seen new lows. Today's an inside doji. No higher high, no lower low. They usually mean a lot of nothing. We might have a new low close to the move down. I like the fact that it's starting to slip off of the test of the neckline, and I need to see a low under 177 real soon in order to be convinced that that was the case a few days ago when I talked about it being that situation. So we sold a shoulder high June 7th. We got short on the high of the market July 20th. We did not get a bearish engulfing during the last shoulder on this fairly lopsided, but it's still okay, head and shoulder top. It's working. Recently, we got a lot of these head and shoulder patterns, both bullish and bearish, starting to formed past tense. And that's why I'm having to talk about the damn things. I did not expect to see a whole bunch like this forming. Next chart is not a head and shoulder. Hogs, neutral, waiting for signals for some direction. Cocoa came all the way back up to where it topped out before, got overbought in the process. And today we're seeing the first piece of evidence that we're starting to slip. So I think we're going to work our way right back down to the 3,300 area. First support is going to be about 35.12. I'm looking for more downside pressure next, and it's going to be a double top, maybe sooner or later. Coffee. I'm looking for another test of support here. Yesterday was a bearish engulfing. They are usually bearish, I said. This one is starting to be bearish. No surprise. This is a huge support area. You got lots of room back and forth in this range before it finally, and it will finally, break out one way or the other. And I'm favoring to the downside overall, mostly because the trend is down ever since April. Next chart. Sugar. Nice rally today. Didn't expect that. We're in an area of resistance. No signals. Not quite overbought, but super close, and we were the last few days. Frankly, I think this is going to still turn back down again. I wouldn't sell it short yet, but if you had reasons to do so that I don't know of, you might try it because the risks would be very small. If you're wrong, you're not going to lose much. That's part of the name of the game. Try to make as much as you can when you're right and lose a very small amount when you're wrong. Next chart. We're back to the E-mini. You guys have a great weekend. Thank you for your time.